When most beginner traders draw support or resistance trend lines on candlestick charts, they're actually doing it wrong. And I was no exception. I was drawing my trend lines completely backwards for a long time. And here's the problem with drawing them the wrong way. You will perceive areas to have support or potentially to be resistance, but because you drew your trend lines wrong in the first place, these areas that you're visualizing, they're not even accurate. The result is inconsistency in your trading and getting caught in a lot more false breakdowns and false breakouts. So how do we avoid that? Well, let's go back to basics. And in this class, I'm going to teach you the right way to draw your trend lines for support and resistance. Now I want to start by showing you an example. So let's go ahead and get zoomed in here. This is a 5-minute candlestick chart, 5-minute time frame right here. And I happen to be looking at a stock, but I want you to know that this is a universal language of the financial markets, and learning how to draw support and resistance correctly, you can apply to any financial instrument. Whether you're trading futures, crypto, Forex, you're trading stocks like me, it doesn't matter because these are respected universally by traders who apply technical analysis in their trading, which is, let's be honest, pretty much every trader out there. So what we have here is a chart where the price made a pretty nice move up. We started down here around $4. We squeezed up to 5, 6, 7. We pulled back. We went up to 8, 9. We pulled back. And then the next morning, we squeezed from $8 all the way up to nearly 16. A 100% move, and that happened very quickly. But let's talk about this area right up here. Now, for the people who drew their resistance lines correctly, it was predictable that we were going to stall out in this area. So let me go ahead and show you what this means. All right, so we've got our trend line right here. Now, there's different ways to draw trend lines, but I'm just going to show you an example of how I would draw this. So if we drew this, let's say like this right there, you don't really get much information. This shows resistance being way up high. It's far away, it's not really dialed in, and clearly this isn't been tested. This level was not tested here, it wasn't tested here, it wasn't tested here. So what if we adjust this trend line, we pull it down just a little bit, and we draw it in a way where we make sure it ties in with this price action here. Now that looks right. I would say this is a valid trend line. Let's look forward. Holy smokes, there we go. That is showing us resistance. And you can see how the price pierced above it, but it was not able to hold and it came back down. Similar to what happened here. We pierced above it, we came back down. We pierced above it, we came back down. Now, I'm going to show you how I knew that that was the right way to draw the trend line through this episode. What I want you to understand is that it is not uncommon for areas of support or resistance to be tested, or for them even to break just a little bit and then for the price to reverse quickly. That is only reaffirming how strong that particular level is. But let's talk kind of high level here about what's happening with support and resistance. These theories tie in with the general market theory of supply and demand. When there's a tremendous amount of demand and a limited level of supply, we see really big moves. Let's jump onto the whiteboard and let me show you what I mean. So let's imagine we have the price moving up very quickly like this. And then we start to get a little bit of a pullback. The price declines down to this area, but then it sort of bases out. We come back up, right? So I would say that this area right here has represented a degree of support. The price has bounced off this area. So if this is a support trend line, this is an area where there is a lot of what? Is it supply or demand? It's demand. There's a level of demand against this price because when the price comes down to it, you have buyers that are coming in and are saying, I want to get in this stock. I want to buy it here. So this level of support is also demand. When you have a high level of demand, the price will not drop. However, as we squeeze up, let's say we push a little bit higher, we come up to this level here, and then we pull back again. We dip back down. What's very common up here is that we would then say, well, this area right here clearly is what? Resistance. So I'm just going to do it R for resistance. So up here is resistance where we have a surplus of supply. We have shares for sale. So resistance up against this level, this is supply. So when we're trading, ultimately, we're often trading between areas of support and resistance and between areas of supply and demand. However, something that is really interesting is, let's say right in this area, when the stock first came up to this high, let's just say that was our first little area of resistance. So we'll just do an R for resistance. And we're going to erase this, and I'm going to show you something else here. So what will often happen when we come back up to this level is we'll do one of two things. If you drew this correctly, then as we come up to this level, it is very likely that you will see a degree of supply. How will that appear? The supply, in this case, will be in the form of people selling shares. So you will see sell orders as the price comes back up to this level. Now, if there's enough demand, we can break through resistance. We break through resistance right here, but because this was a well-respected area of resistance, what's often common is that the price comes back down just for a moment right here. This is when we are retesting the resistance trend line. So the price breaks above, it comes back down. And if it can hold this price, then this area that was previously resistance becomes our new support level. It becomes support, and now there's demand off of this price. Because now traders are saying, well, hold up, this was resistance, but we're holding right here, and there are buyers that are propping it up. So now if we hold this level, we look as this at being support, and we look for the move up here towards resistance. Now, when we're looking at a chart like this, typically what I notice is that these levels are at horizontal prices. These are at very specific prices, which I would consider to be half and whole dollars. So let's say that's 7. This is 650, and then this would be 750, and this would be 8. Why is it that so many financial instruments trade with respect to half dollars and whole dollars? Why do we see resistance at 7, a little pullback, and then if we can break above it and hold above it, 7 becomes support? These are psychological areas. The reason they act as resistance is because a lot of times when people will make a purchase, they get in, they'll set a profit target and they'll say, you know what, I want to hold this until it goes to $8. And what do? They put their sell order out there at 8. So when you've got your sell order placed out there, now all of a sudden this creates a level of resistance and it's a supply. There are now shares for sale up against 8. So in order to overcome all of those sellers, you're going to need even more buyers to break through that level. But if the price is already extended coming up into it, then what's likely going to happen is you're going to just have resistance here. Buyers are not going to feel confident chasing and getting in this high, and that's when you're going to see a momentary pullback. Now, if the price is strong, if the momentum is strong, you've got a good catalyst, then we may see support around 750, the most recent psychological level. We bounce off of that level, and then we look for a move back up. And on the second attempt, we look for a break through that high. So this is the standard kind of stair-stepping pattern, step up, step up, step up, step up, that occurs in the markets. There's no such thing as something that goes straight up. There's always waves, but these waves correspond to prices where people find lots of buy and sell orders lined up. So if you looked at an actual order book, what you would notice, I'm just going to draw an order book for you, and this will be, we're going to do it in ladder form. So this will be $7, this will be $7.50, this will be $8 right here, this will be $6.50, and this will be $6. All right, so what you would notice if you're looking at all the orders is that orders are clustered around these levels. So what that means is that once the price breaks through one of these levels, it moves very quickly up to the next one. Once it breaks through all of these sell orders here, it's going to move very quickly to this one. It'll move very quickly to this one, very quickly to the next one. And once it's over those levels, all these orders will now switch from sell orders to buy orders. Now people are buying against these levels of psychological support. They're saying, oh, well, if it comes back down to 6 or 650 or whatever the case is, that's where I'm going to buy. So it's very common that we see these kind of trenches where all the orders are stacked right around half dollars and whole dollars. So if we knew that this is our order book, and it is the order book for most stocks, then it would be sort of to be expected that as we approach a level like this, we would pull back and have a little bit of resistance, right? And if we can break through that level, we would expect to move up to here. And this is going to be the typical kind of wave that most stocks will trade in. They'll have this nice burst higher, a little pullback, another push higher, until at some point, well, it can't break through that wall at 750. And then one of two things happens. It either consolidates until it can break, or you start to have a breakdown and a change in trend coming back down. Now, what many of you know about me is that I like to trade the first pullback right here. I like to trade the second pullback. I'm usually a little bit more cautious on third and fourth pullbacks, because once the pattern becomes sort of, I don't know, it just starts to get too extended, and we get to a point where buyers are no longer confident jumping in. So we recognize without question that most stocks are going to have resistance at $half and whole dollars as the price is going up. All right, so this is very well respected. And once you understand that sort of fundamental concept of supply and demand and support and resistance, it's going to help you in your trading, because you're going to learn to expect that these stocks will have a degree of resistance around these levels. So it's not surprising that one of the earliest forms of trend lines are going to be horizontal trend lines. So a horizontal trend line is essentially, it's already in a way drawn on these charts. You can see it at the whole dollar. There's a white grid that goes from 7 across, all the way across, and 8 all the way across. So in this particular example here, you could certainly see that we had some resistance up around $9. This is an example where the price moved up to about 9 right here, and it didn't get all the way to 9. So, in fairness, sometimes we'll go straight to that level. Sometimes we don't quite make it all the way. So I'm going to zoom in on this for you. So right here, we get this move up. We dip down, we push up. This is 894 right here. So we're just below the psychological resistance of 9. We drop back down, we come back up, we drop back down. We come back up, we're sort of holding over it. You can see we're jumping over and under this level and kind of holding as support. Now, I want you to watch this right here. Look at how we break through 9. And this is a perfect example of coming down and retesting that level. This would have been a fantastic entry right here, buying the retest. Because if you got in right there, you know that $9 is support. So if you're buying this candle right here at $9.10, you've got 10 cents of risk. And then look at this upside. This goes all the way to $16 a share, nearly. Now, if we back out of this for 1 second, we'll back out of the Zoom. What we'll notice here is that as we come up to each of these levels, each of them becomes a little battle. So there's a little battle that was happening here around $6. There's a little battle that's happening here around $7. There's another little battle that happens around $8. This is very common. Now, as this pushed higher here, we saw the same thing. We had resistance right here at 10. So if we zoom in on this candle right here, what you'll see is right around $10. We squeeze up right here, we pop over, we dip down. So that shows us just in those little candle wicks how we kind of struggled in that area. And then it pushes up to 11, goes straight through, goes up to 12, dips below 12, and once it can reclaim and prove it can hold over 12, 12 becomes support. And then it goes up even higher. Now, this became borderline parabolic when the price is going 50 cents or $1 a share at a time. That's when I say it's parabolic. We're seeing really incredible momentum, but that's not as common. Usually what's more common is that we move more in 50 cent kind of blocks, or maybe $1 a share at most, where we'll break the $half as we did right here at 550, and we push up to 6 and then up to 650 and we dip back down. That's more common. So support and resistance at $half and whole dollars will create horizontal support and resistance trend lines. These are very easy to snap on your chart. Most charts will allow you to draw a horizontal trend line. This is called a horizontal line right here. I have it as one of my favorite tools, so it's always on my chart, and then I can just pop them on. If I press the control button, the trend line will snap to the top of a candle. However, I'm not always going to draw these at the top and bottom of a candle, because in an area like this, you can see that the support really is about 750. We're dealing with support at the $half, but if we zoom in here, you could see that we do dip down just below that level. We'll dip and then we'll come back up. We dip and then we come back up. We dip and then we come back up. And this shows that the price is definitely being tested. But in fact, the more times it's tested and the longer it holds, the more it gains a validity that this is a very clear level of support where we have demand. There are buyers that are buying off of this level. It's also true, however, that the more times a level is tested, eventually, usually it's going to break if it just keeps getting kind of sold into, pushed into. And that's the same with a resistance level. If you have a resistance level like right here, and the price comes up once and twice, 3 times, 4 times, 5 times, we get into a really tight wedge, and then these usually break to the upside. So this is more of a flat bottom consolidation pattern, a wedge, that usually would resolve to the downside. But in this particular case, the price did hold up at 750. So this horizontal line is going to be drawn really at the half and whole dollar. When we're looking at an example of a double top, for instance, so I'm going to type in CTNT, and we're going to switch to daily chart. On this one, I observed an area of resistance that was right, this is the all-time high. So you see the all-time high is at 690. Now, we might as well say resistance is at 7, but the price to the penny is 690. So what happens when we come up to it right here? What you'll see is on the first day we came up to that level, resistance, right? Now, in this case, we did go to 7. We went up to $7, but it was heavy with sellers at 7. So there was a high level of supply at that area. The second day, we opened a little lower and it curls up again. It tries to come up to 7 and it actually broke 7, but only like by 5 cents, and it drops again. What I said about this pattern at the time is that this is a classic double top. So you have this big cup shape here where basically you have a high and then the price came all the way back up. Sometimes you could draw like a little kitty cat or a little devil, right? Those are the devil horns. That's his little tail. You can't see a tail on the chart, but you got to visualize it. So this type of formation usually results in a pullback. And typically we get the formation of a handle. So we have the cup right here, the big cup, and then we have the handle right here. Now, actually, just as a matter of coincidence, I have an example of a cup and handle right here that I was working on for one of my classes. So yeah, the cup and handle is right here where we've got this pullback, the move back up, and then we broke through this level, and then we push higher. So the cup and handle is very common. All right. Now, if we switch back to our other chart over here, I want to start talking about ascending and descending trend lines, because these are the ones that are a little bit more complicated. So this is the trend line that I showed you on the first example, where I connected it right here, and it goes all the way to here. So a really common question that people ask me is, Ross, should I connect the top of the candles, the top of the upper shadow, whenever I'm drawing a trend line? So let's just go ahead and actually clear out all of my drawings. So I'm going to clear it out, start fresh. So if we were connecting the top of trend lines, we would be connecting like this. Oh, sorry, the top of candle wicks. That's the top of a candle wick. That's the top of a candle wick. Here's my rule of thumb. It's not important to connect the top of candle wicks. In fact, it's not important that every time you draw, you do it in the exact same way. What is most important is when you recognize that the level has been tested multiple times. So in fact, if I bring this down more like this looks more valid, even though, if we're going to be totally honest, this doesn't actually connect. When I connected it right here, it goes through the middle of a candle. I connected it right here. It's also going through the middle of a candle. However, it feels like this is closer to what's accurate, the way the price is kind of hitting it. So usually what I'll do is I'll adjust the trend line connecting highs and lows, because I don't want to just cross it in the middle. I do want to at least connect to somewhere on a candle. It could be the top of a body. It could be the bottom of a body. It could be the bottom or top of the candle, but it can't just be sort of, I don't like trend lines that are just totally floating in space like this, where I don't connect it to anything. I do like to connect it at least to something. So in this case, maybe, I tested a couple different ways. And usually this is almost like putting together the pieces of a puzzle, where suddenly it just sort of snaps into place and you're like, yep, that's the one. That's the one that feels the most right. So in this case here, what I like about this trend line is that it connects this dot here naturally between the connection here and the connection here. And you see up in this area, there's sort of some validity there as well. Now, something that a lot of traders like to do is look for channels. So the way I would look for a channel is you would actually copy and paste this trend line and you would bring it down something like this. Now, if you bring it down like that, you would see, okay, interesting. It seems like it's sort of support, breaks below, back above, sort of support, maybe trying to be support. And it's not really clear that it's really valid over here, but it is very common that stocks will trade in these kinds of channels. So just by copying the trend line and duplicating it and pasting it, you could start to move around the duplicate and see, does this feel valid? One of the things that I've always found really fascinating is that when you draw a trend line the right way, it can be in play for weeks, months, even years. So if we look just, for example, at Tesla, we're not going to look at the 5-minute chart, but we're going to look at the daily chart. We're going to step back, we're going to look at this daily chart, and we're going to start to draw a little trend line in here. So you start to connect this trend line in this area, right? And now it's like, whoa, look at that. This is over the course of years. It keeps coming up to this level right here. It broke above it and then it's below it. It broke above it, but remember, it tests it, but it's not able to hold above it. That's the really critical spot, is when something breaks above, is below, holds it, and then moves higher. That's when things get exciting. But it couldn't do it in this case. Now, this is a descending resistance line in this particular case. If we copy this, copy and paste, what some people will do is they'll start to try to look for its partner on the low side. Now, in this particular case, I don't really see a super valid support. I don't see a super valid spot for this. Perhaps if we dialed this in this sort of area here, there's something, starting to form here. Let's see, connecting these lows. A lot of times when we have a candle where the price drops way down like this, I consider this to be an attempt at breaking support that didn't hold. And that's also noticed when you look at the position of the 200 moving average. It dips below and then is right back above. So I'd be more inclined typically to draw the trend line just slightly above that candle and let that candle be the one that's just sort of outside breaking the trend. And this starts to look, a little bit more reasonable in this area. You've got support, 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 tried to break below it, got back above it. So that's something maybe to keep an eye on. Now, you could also try this, copy and paste, and then put it on the upside here and see, does this line up any better? But in this case, not really. I think that it's just really fascinating, though, when you see these charts where a stock has been holding a support level for a really long time. So we've had these on the S&P 500 as well. You could find them on really just about any stock or indice. You could see these areas where clearly there is demand, right? Because that's what we're talking about. This creates demand. So you have a really steep line like this that we were holding for quite some time. So this is also something that often happens where the price will be above it here. It seems to be respected once, twice, 3 times, 4 times. Just because it breaks doesn't mean I should get rid of the trend line. Because watch this, when it comes back up, this can now form as resistance and we could be riding right underneath the bottom of it. So now that line, which was once support and was very valid, becomes resistance. So a lot of traders will save their trend lines, they'll keep them on their charts, and for years, you'll see a trend line on the daily chart. Now, I'll say that when it comes to a lot of small cap stocks, a lot of lower price stocks, like something like this that's just on the scans, these are going to be less proven. They're going to be less established. Having said that, though, I mean, boom, right into that level there. So, and this was kind of a logical place to connect these two and just sort of see what happens moving forward. But it really is only 2 places it connected. So it happened to run into that resistance right there. One thing that you can do is you could draw the resistance on your on your daily chart, and then you switch the time frame. So you could switch your time frame down to a 5-minute, and then when you do that, what you'll see is the area where that daily level crosses on the 5-minute chart or the 1-minute chart, whatever your intraday time frame is. So then you're like, oh, here we are. We're right at this level. However, when we're trading something like CTNT, which was the one that made a really big move, but ended up reversing pretty much the whole thing. This one, we look on the daily chart, because it was a blue sky setup, there really wasn't anything to look at for resistance. But that's part of what made it a pretty special pattern and gave it the ability to go up as high as it did, because there was no resistance. There was no resistance in the form of ascending or descending resistance lines. And the horizontal resistance was just at $half and whole dollars. So anytime I'm pulling up a chart, one of the first things I'm checking is the daily chart. I pull up a stock and I check the daily chart. Now, in this case, I can see that there's a large gap right here that was formed when the stock dropped right here. So now if we come back up, we know that we're going to have a little bit of resistance here in the form of it being the bottom of the gap, and coincidence right there, 200 moving average. So the 200 moving average is right here. So 1528 for sure would be a horizontal level of resistance on this one. I don't think very many people on this would try to draw a support resistance line, trend line, in this kind of area. I think this would be probably too obscure. It's only 2 candles. The stock has gone through reverse splits. It's really not very valid anymore. It's always worth taking a look at, but it's in that case, it's probably not a line that's going to work. So if we go back to CTNT on the intraday, this was one of these Chinese stocks that had an incredible move and then liquidation. The insiders started just selling. But if we look at this, we could dial it in a little bit. So right here, as the price began moving up, we would say, all right, well, what are areas of potential support? So I would say kind of in here, but that's not the right spot. Probably something a little bit more like this. Now, when you're drawing a support line, it's important to know that you want to connect lower candles. You wouldn't want to connect it to like this candle here. That would be connecting a resistance point with a support point. That's not a correct way to draw it. You can connect resistance and resistance, and you can connect support and support, just like this, but you don't want to cross through price action. The only time it's okay for the price action to cross through it is in a case like this, where you've got support clearly, it then comes down, it breaks that support level and is below it, right? That's fine. Now, maybe in the case of a stronger stock, it would come back up and try to get back above it, but that wasn't the case here. Coming back down on the downside, we start maybe a little bit higher. Let's see, I'm just going to move this around a little bit. I also try to be a little careful drawing super steep trend lines, because they rarely can hold for very long. The price ends up it's not possible for the price to kind of drop that fast or go up that fast. So in this area here, I wouldn't say we have any real, this is not, no one should draw a trend line like that. It's not going to be supported for long at all. You're going to end up deleting that off your chart. This type of support line or resistance line, I wouldn't do that. In this area, all you have is horizontal resistance. $19, whole dollar, coming up to 20, right? This one up here at 24 makes sense. This one up here around 25 or 30, right around $30. Those are psychological levels that make a lot of sense. And that's one of the reasons we love these parabolic stocks, because when they start to get really juicy like this and move fast, you don't have descending resistance from an intraday perspective. You could have descending resistance that's coming from the daily chart, but in this particular case, there was none. So we didn't have any descending resistance from the daily chart. Now, in this case, we also really didn't have any ascending resistance either. So an ascending resistance line would be when the price is moving up. And, this is less common to see, because in order to have ascending resistance, you need the price to have been making higher highs. So like right here, you could kind of, that's really flat. That's not even ascending. That's just flat. Most of these lower price stocks that I end up trading, you're dealing with descending resistance. The price is coming down. That's what's much more common. So an area like this, yes, the price broke it. It comes back down, but it's still, may still be worth keeping an eye on. One thing that I'll caution is that sometimes you'll see someone whose chart looks like a spider web. It's just absolutely insane. And unfortunately, when it gets like that, it's going to be really hard to focus on what you're looking at. So I would encourage you to try to keep it relatively simple, looking at half dollars and whole dollars, horizontal areas of support or resistance. And then when you pull up a chart like this, for me, when I pull it up, my eye naturally is kind of connecting the tops. So I'm like, oh, we've got a top right here from there to there. I just sort of see it that way. Or I look at this area and I'm like, okay, well, that's a little too steep, so that's not so valid. This one, again, it's okay to cross here, these tops. That's not a problem, but it came up a little higher than that there. So maybe down on the support side, sort of say, all right, do we have support level here? Maybe not. If you see that the price is breaking with no regard, breaking the trend line with absolutely no issue, then it's like, all right, I guess that's not a super valid level. The levels that work the best will be the ones that the most traders are seeing, ultimately. So it has to be pretty obvious. And for a long time in my trading, I really only used these horizontal levels of support and resistance because I felt like the ascending ones like this were just a little too abstract. Like I was like, I can get it, but at the same time, I don't know if enough other people are seeing this. And if they're not seeing it, then realistically, these aren't gonna work. This is a nice example here where you've got support, it turns into resistance. Again here, another example, support, resistance. So that's a really good one. This is another decent one here, support. Oh, maybe we just already looked at that. But anyways, or no, I think we looked at that one. They're just similar. But once you start to recognize that, it's going to help you in your trading because it's going to prevent you from buying into these levels that are clearly resistance. And that's ultimately what you want to avoid, right? If you see a trend line and you're like, okay, I already know that we're right around the $1/2 of 150, that's going to be potential resistance. And then I see this ascending resistance line right here, that trend line. It's like, yeah, this is a spot to hold off. There's a red light here. Now, traders who get good at recognizing these won't even have to draw the trend lines. You'll get to a point where you can visualize it in your mind. You'll just sort of know, oh yeah, I can see that. I had this, there was this day that I was at the beach and I had my phone and I was looking at a chart and I was kind of going like this. I was like, well, now I think I see, yep, there it is. And it was like sort of projecting to the penny, like where it was going to run into resistance. And, it's just something that once you learn to recognize these patterns, once you see it, it's like they just pop out of the woodwork. It's like a magic eye poster, if you've ever done one of those, where you see nothing, and then, whoa, there's everything. Now I see it. I see the support, I see the resistance, I see the ascending, I see the descending, and then we add other indicators like MACD, moving average convergence divergence indicator, and now things are really coming together. Now, the stock that I traded just today, for instance, this one, SYTA, this one had news this morning, so it went up about 75% on news. But to be honest, this is not one where I really had a strong ability to draw any ascending or descending levels. We had a double top right around this area here. On this particular one, we kind of came up here, double topped, little cup and handle formation. We pushed higher. We did struggle around $4, the whole dollar. And what was interesting on this one was that there was a lot of sellers against 4. So we kind of struggled there, dipped down. We got above it, came back, held a support, bounced up, broke below it, back above it, back below it, struggling, kind of pulling away, back up, back down. This is one that just, it kind of struggled a little bit. There was another one today that was similar where the price was sort of struggling around, I think it was $4 or $5 a share. This is BuzzFeed. It was up around 4. And I just kind of, I could just sort of visualize like, all right, yes, we're not coming right up to 4 here on these candles. We're at 394. But I knew that the issue was that right up here around 4, we had all of these sellers that were just stacked up. There were just tons and tons of people who maybe they got in at $2 or $3 and they just set an order to sell it at 4. So that created a lot of resistance there. We got above it. We kind of got back below it, back above it. And it was an area that was a real battle. It wasn't convincingly broken. The best examples will be, when we're watching a stock and it breaks one of these levels. And so there's sort of 2 scenarios. One is you have breaking news that comes out and boom, the price just goes straight up. Okay, so that's awesome when that happens, but that's more the exception, not the norm. I mean, it might happen a couple times a week, but even still, what's more common with most stocks is that they're going to trade in these areas where they're just going to be kind of steadily stair-stepping higher. So we have news that comes out, we push up to 6, and the best case scenario is that we pull back right here, and this is the place to buy. Yes, on the one hand, you're buying right under resistance. On the other hand, it's proving it's holding this level, and you know that if it can break this level, that's probably going to hold above it. It might even come back down and retest it, and when it retests it and it doesn't break below, that's just even more confirmation. So, and for what it's worth, this pattern right here, if we got zoomed in on that particular pattern, that's where we're watching the first pullback. So we have the 2, 3, 4 green candles, and then 1, 2 candles of pullback, looking for a first candle to make a new high. And this bottom right here, that's always your max loss. So even if you're getting in right here and you're getting in underneath resistance for that move higher, you're still getting in relatively close to your max loss, which is the low of that candle. So these are the patterns that I'm trading for the most part every day. Now, those of you guys, if you want to learn a little bit more about technical analysis, I have a 112-page deep dive study guide that goes over all of my favorite chart patterns. So one of the things we've been talking about today, certainly, is chart patterns, horizontal support resistance lines, and the ascending and descending resistance and support lines. So I encourage you to download my 112-page PDF. You can print it out. You can start putting some of those charts up on, around your desk, because one of the things you want to get really good at is recognizing those patterns. As active traders, we're in the business of trying to predict the future, what's going to happen next. And the way we get really good at that is by visualizing the full pattern. So we only see half of it when we're watching the chart forming. We see the first green candle, the second green candle, first red candle, second red candle. We have to be able to visualize what's going to happen next. The traders who get really good at recognizing these patterns, you can see exactly how you want it to resolve. And so then you get in, you've got your max loss, you understand your risk, and you expect to see that resolution. And of course, when you choose the right stocks that have a catalyst, that have news, that have that volatility, that's where you usually are going to find success. You see the positive resolution. And in the times where it doesn't resolve the right way, you know the place to exit and to get out. If you found this episode helpful, I hope you hit that thumbs up. I hope you're subscribed to the channel for more episodes about trading strategy just like this. And I want to encourage you to go ahead and download my 112-page deep dive on technical analysis and my favorite candlestick chart patterns. Thanks as always for tuning in. I'll remind you, as always, trading is risky and my results aren't typical. So manage your risk, take it slow, and I'll see you back here for the next episode real soon.